The S&P 500 is just a tad away from being in correction territory, meaning that it's almost down more than 10% from the all-time highs that it hit earlier in the year. Since I spoke to you last week, the S&P is down 3.6%, and it's down 5.5% year to date. Now, most of that 3.6% drop that we had over the last week occurred on Monday. And on Monday, the selling actually started on Sunday in the futures market after Donald Trump made some comments to reporters. What Trump said was that he recognized that some of his policies, and I'm paraphrasing here, was creating some volatility for the market. And he also admitted that there was a possibility, he didn't say a probability, but some possibility that there might be a slight recession. Yet he was giving the message that he thought his policies were on course and he was going to stick to them, and eventually that would be for the common good. This represents a pretty big change for Trump, because during his first administration, Trump 1.0, he seemed pretty obsessed with the stock market and was always pointing to it for validation of his policies. So for him to say, no, I'm not worried about it, is a big change. And from a market perspective, if you're an investor and you assumed, well, Trump might do some crazy policies that upset the market, but when he sees the market drop, he'll just quickly reverse them so they'll go back up again. Well, here's Trump saying, no, don't count on that. Now, do I believe Trump? No, not really. I still think he cares about the market a lot, and if the market really got in trouble, he would probably do some things to make it recover. I think he's just being smarter this time. If he would said, oh, I care about the market a lot, your decision-making ability becomes a prisoner of the market. Now, we seem to be in a pretty ugly market right now. Is there anything Trump could actually do about it to get the market to recover? Well, I think if you're watching CNBC, the answer is yes, because if you're watching everyone coming on and they're talking about why the market is selling off, they're all, a lot of the blame is going to Trump's policies and the uncertainties he's created with tariffs. So all Trump really, if those people are right, all Trump has to do is sort of cool it, and the market will probably recover a fair bit. Now, I'm not expecting that to happen anytime soon. Things would have to get a lot worse before they would, but I'm just pointing out that I think at some point you would see Trump adjusting what he's doing if the market sold off too much. Now, going into the idea of why the market's going down, there's sort of two competing narratives about that. Now, for the first reason, of course, the uncertainty, all roads do lead to Trump. Now, what people are saying, or other observers are saying, are very similar to what I've been saying on these updates, that if Trump would simply just put a bunch of tariffs, let's say a 20% or a 25% tariff on everybody and not make any changes, maybe that would be not the best thing for markets, but it would provide certainty for businesses. They'd know what the policies are, and then they could start making decisions and continue to invest, et cetera. But the way he's going about it with one day there's a tariff on, we're going to put tariffs on Canada, Canada's going to put tariffs on the United States, then the United States said, we're talking to Canada, Canada stops putting their surcharges on electricity in the United States, and then the US delays the tariffs. All this is like, we don't know what the policy is, and that is what's causing trouble for the market. The interesting thing about what appears to be going on in that respect is that when I had described it before, I kind of focused on businesses, but it seems that the biggest impact is actually happening in consumer confidence. If we have plenty of data showing that consumer confidence in the US has dropped, and although I would have pinned the blame for that more likely to be on Elon Musk's Doge policies and federal layoffs affecting consumer policy, when they interview these people about why they're cutting back on spending or whatever, they have mentioned the tariffs a lot. So the tariffs are playing a role in that drop in consumer confidence. The other thing about the current policies, with all the uncertainty, is that it's not likely the policies are going to remain uncertain for all of Trump's 4 years in office. I think what will happen probably in the latter half of this year is they will settle down on some permanent policies, and then the market will have certainty again. So we can look forward to that. So the big question is, what sort of damage happens to the economy in between now and we getting to find out what the final trade policies by the Trump administration is. Right now, that impact that we were talking about from the uncertainty on stocks and stuff, it's apparent, but it's not as broad-based as maybe you would think. For instance, one of the things that got people worried about the consumer were comments about Walmart, where Walmart said, "Oh, we see the consumer weakening in the second part of the year." But Walmart is still outperforming the general market. And it's down about 2.5% year to date. And over the last year, it's up 44%. So it still has a pretty full stock valuation. It's not trading like a retailer that really has a lot of consumers who are in trouble. And also, whenever we go into these recessions, one of the things that you always hear is the first thing that people will cut back is buying expensive coffee at Starbucks, because that's sort of a luxury purchase. But Starbucks is actually up 8% year to date. Now, as I said, it's a mixed bag. Delta earlier this week warned that it was seeing softness in Japan. Delta Airlines, their share is down a lot year to date. But if you talk about spending, Visa, the credit card company, is actually up year to date, and its share has been very, very strong for the last year. So what I'm saying is the market isn't really giving us a clear indication that the consumer is really in that trouble. So if you're a pessimist, you just say, well, just give it time and all those stocks will drop as well. But if you kind of say, well, I think we already have the information that there is some problem with the consumer and this is the way the market's reacting, maybe the problem is not going to be as bad as some people fear. Now we'll go to the other explanation for the market dropping, and that's the high flyers dropping. And I think that's definitely something that's happening, right? You can see that those Mag 7 stocks that were so awesome last year, they are really the ones leading the market down. And you look at some, I was watching CNBC at the beginning of the week, and they had one of their frequent guests for technical analysis, Carter Worth, on. And he was showing how some of the stocks that are just boring value stocks are doing very, very well. So you have stocks like Bristol-Myers, which is up year to date. You have stocks like Verizon, the US telephone company, which are up pretty sharply year to date. So there's still money in the market. They're still putting it to work, yet the stocks with the very high PEs have sort of, and big expectations, have gone down quite a bit. And the good thing about that is, if that's really what the market's doing, after they've come down a bit, money should go back into them because they're better value. Now, is NVIDIA good value now? Well, on a PE basis, it's trading at like 24, 25 times forward earnings. That looks like pretty normal for the market. And given that NVIDIA is going to experience very strong growth, not just this year, but next year as well, maybe NVIDIA isn't overvalued. But of course, NVIDIA is in the semiconductor business that's cyclical. Stocks in cyclical businesses should trade at lower PEs. we don't know. Maybe NVIDIA still is expensive and still needs to come down as well. My point is that if what's happening is that you're getting the market back to more normal valuations, then you shouldn't be panicked as an investor because when stocks drop, money will pour back in to buy them. And that's why the money today is buying those very boring type value stocks like Bristol Myers and Verizon.